Hey everybody, checking out the market today. Looking over here at coin360.com, we're seeing that Bitcoin is down about 5% in the past 24 hours. A lot of different coins have jumped up. BSV up 23%, TRX up 20%, ADA Cardano up 20%. There's a lot of things that are really jumping up. 21% for Stellar XLM. Looking very good. BNB at almost $41, up 22%. There's a lot of things that are jumping up, a lot of things that are increasing in price, up around give or take 20%. Ethereum is down about 1%. It's been pretty even today. Bitcoin 5%. That's pretty significant. What's happening? We're seeing those funds shift. Of course, that's what's going on. We pop over here, take a peek at our bitinfocharts.com. We can pop into the average transaction history chart. Zooming in over here, we can see that there's been this steady incline, this increase in the number of transactions and the fees for those transactions that have been happening. We know there's been some major market moves with the price of Bitcoin shooting up from where it was earlier this year at $3,000, give or take, and then increasing to where it was just short of $15,000. And maybe going through a couple of these charts, taking a look at the miner profitability, we see that since the beginning of this year, since January, February, it was pretty even, pretty flat. Then April, past few months, there's been a shift. We know there's been a shift. This data is just showing us what we've been seeing in the markets, this undeniable rise from Bitcoin going from where it was at $3,000, $3,500. It could have gone up, it could have gone down, it could have stayed the same, but we know that if it has increased a few 100%. And we're seeing all the fundamental numbers behind that also increasing. We're seeing the transaction fee. What should we pop into? Taking a peek at maybe the social media, looking into the tweets. We see that, right, there was a spike, it's gone up, it's gone down, but more recently, right now, it's really in the downward trend, right? There's been this uprise in the Bitcoin, there's been this uprise in people taking notice what's happening in blockchain, and we are seeing, not only this incredible spike up with this interest in Bitcoin, but recently, right now, it's a little spike down. It can pop up after that, but it's undeniable looking over here that right now there is some shifting going on, there is some recalibration going on, and taking a peek on continuing with the bit info charts, we're looking at the Bitcoin rich list, and we're seeing an increase in the number of total holders who are involved that have an address that is publicly viewable on the Bitcoin blockchain. Number of addresses that have at least $1 is about 20 million, 19.7, 19.8 million addresses have at least $1. Number of addresses that have at least $1,000, just short of $3 million addresses, right? 2.9 million addresses out there that have at least $1,000 in Bitcoin. This is provable assets on the blockchain. We're talking proof of keys, proof of access, proof of verifiability on the public Bitcoin blockchain. The number of users out there, the number of addresses at least out there that have between at least one Bitcoin and up to 10 Bitcoin, we're looking at less than 585,000 addresses out there. It is just 2.2% of the total addresses out there, containing just a total of 1.5 million Bitcoin. So there's 500,000 people out there that have at least one Bitcoin in this address, right? I mean, we say people, but you could have 5 addresses in this blockchain. We could have, some of these addresses that have dust in there. But the overall trend that this is increasing, and the overall trend is that no one is ever gonna be able to have an equal number of Bitcoin, because there are just so many whales out there that have between 100 and 1,000 Bitcoin between a thousand and 10,000, 10,000 and 100,000. If you pay attention to Twitter, and if you're getting the whale alerts, the crypto whale alerts, seeing the shifts in Bitcoin and Ethereum and these other cryptocurrencies that are being moved around, there are just very few people out there that have access to the amount of Bitcoin to move markets in a verifiable way, in a way that is immutable, that no one can take away, that no one can deny permission, that can move across borders. And more so than that, that the second aspect to it all is that this value, this currency, this money, this asset, this store of value, whatever it is that we want to call it, it can't be debased. We know what the inflation rate is. We know, looking over at livecoinwatch.com, that there's a circulating supply of 17.8 million Bitcoin out there out of the total 21 million Bitcoin yet to be mined. There's currently 17.8 million of them. And looking at the Bitcoin rich list, there are there's 2,000, just over 2,000, maybe less than 2,500 addresses that have over $10 million in Bitcoin. Some of them have $100 million in Bitcoin. Some of them have more. Some of these addresses, are accounted for, and some of them we know who they belong to, exchanges or different organizations. But there are not a lot of people out of the billions and billions of people in the world. There's just 2,000 addresses that have over 10 million. There are less than I guess just 18, 20, less than 21,000 addresses that have over $1 million in Bitcoin. It's not a lot of people out there. And what's going to happen is that there's going to be a shift. There's going to be an interest into what Bitcoin is, into why it's here, into what's happening with this currency. And when that happens, there's going to be not just a shift technologically, not just a shift with the corporations and the way that people are doing business, but it's an entire paradigm shift inside the culture, inside the society, not just in your local neighborhood, but across the world. Not just across the world, but down the street in your local neighborhood. People will talk about this, and maybe it's going to be a Facebook Libra coin. Maybe JP Morgan and Goldman Sachs or the Federal Reserve will team up and create some other parallel to the a digital dollar equivalent, a crypto dollar. They may try to call it, but there's really only one true Bitcoin, and other reserve currencies, other fiat currencies of the future are going to have to hold a certain amount of Bitcoin. They're going to have a certain position in Bitcoin in order to give weight and give value to the rest of the basket of the financial service that's being provided. Just as countries have gold, and some countries used to have the gold reserve and base the value of their currency off the gold reserve, we're going to see, as lots of people have been saying, as Max Kaiser has been saying for a long time, as Trace Mayer has been saying for a long time, as Anthony Pompliano has been saying for quite some time now, that this Bitcoin is going to be critical for any fund, for any corporation, for any government, for any sort of institution whatsoever that wants to have a basis in value, that wants to have this new digital checking account that can prove who they are and where they are financially with the value that they've been able to provide and the wealth that they've been able, the power that they've been able to accumulate with stacking these satoshis, is going to be critical for them to continue doing business in the future. And knowing this information now is critical for all of us to start learning about this technology, to start running a Bitcoin node, to start make our first transaction, even if it has to be with Coinbase or the Square Cash app, to send and receive $1 or $5 or $10 of Bitcoin with somebody else, even if it's to purchase a button or to purchase something online or to just experiment with this technology, is going to be in your best interest, just to put you ahead of the game, before a lot of these opportunities really pass you by. So this is a critical time, and this is a fun time. This is an interesting time, and even when TSIS comes about, and the TS, or is it the TSHTF comes around, then the world will go on, and just the systems and the processes and how we do things will shift a little bit, but there's still people, there's still communications, there's still relationships, and that's the shift that's going to happen. And the interesting world, the interesting shift, the interesting paradigm that we're walking into, right? We had the radio and television, we had the internet and social media, and now we have this evolution of the internet with money and with this whole financial technology connectivity, which is really just connecting humans together more and more across the world. This is connecting people together more and more across the world, simplifying how we have relationships with each other. Let it be that we're down the street from each other or we're across the world from each other. Anyone is going to be able to connect with anybody and exchange goods and services, to exchange value, to help each other, to share ideas, to send and receive donations, to increase the productivity that people and corporations and internet connected devices, AI algorithms, all sorts of smart contracts. It may not even be a sentient device at the other end of the relationship. But as we've seen with so much of the technology now, that we can have emotional relationships to something that isn't alive. We can have emotional relationships to our cars. We can have emotional relationships with our investments. We could have emotional relationships with the work that we put behind our education or our career. And this emotion, this energy, that we have in these relationships with people and with, other places and things that aren't people, is going to be, communicated in the form of Bitcoin, in the form of cryptocurrencies, in the form of tokens, non-fungible tokens on the blockchain. And this is going to allow us to have this digital representation of aspects of our lives that are extremely meaningful. Just as we used to have newspapers, and newspapers used to provide that information, and there used to be single sources of that truth, and now everybody can have their own newspaper. Everyone can, is providing value. Everyone is putting out what they're receiving from the world and their interpretations to the world out there into the internet, out there into social media, out there until their circles of influence. Now the same thing is happening with databases. The same thing is happening with these sources of records and information. Let it be game tokens that we have now, things that are purely digital, or let it be what we all foresee coming, which are going to be deeds and titles and ownership of cars and art and real estate, and all sorts of everything will be at some version, some way tokenized on this blockchain. And they're truly is this an exciting time to see and recognize all of the things that are the things that come. So popping back over here at Live Coin Watch, just seeing what we have over here in the market the past 24 hours. Again, Bitcoin down 5.43%, Ethereum down 0.9%, XRP down 2.47%, Litecoin down 4.2%. Most of the coins on the top 10 not up. So we get to some of these, Chainlink, some of these lower tier coins, and we have our dogs in the race, I guess you could say. But really, all bets are on Bitcoin. All bets are, really on the platforms that have the greatest network, the greatest usage, the greatest number of users who are participating in all of the different aspects of the ecosystem. And so those are the reasons why Bitcoin is the winner of the world right now. It is why Ethereum has such strength, and will probably be around forever. Minus a catastrophic bug on either of these systems. Just the community behind Ethereum, the technology behind Ethereum, the ecosystem behind Ethereum, can be a subsystem. There can be subsystems to the main system, right? There will be a main system. It will have the majority of the attention, the majority of the focus, the majority of the concentration. And like I say, all bets for that right now, in my opinion, and the opinion of a lot of people, seems to be pointing in the direction of Bitcoin. So popping into the news very quickly. This is even being reported by Bloomberg, where Bloomberg is, being reported by Bitcoinist.com, is finally accepting that Bitcoin is here to stay. That the mainstream media for the longest time has been talking about Bitcoin, cryptocurrencies, but we see it, inside the platform, inside, the news, being talked about more and more out there in the world. Not only is in the news, not only is it being talked about to such a degree, but we also see, as in Cointelegraph.com, the IMF predicting central banks that issue digital currencies. So not only is this something that is being, explored from the bottom up, from the new systems being created up, but as predicted, this is also being directed, from the top down. If and when, more so when the central banks happen to get involved. So the International Monetary Fund, the IMF, believes that the central banks may start issuing their digital currencies in the future. And according to a report by the IMF at June 27th, just recently, the paper in the IMF, the World Bank, they conducted a survey of the fintech world, soliciting answers from all these financial institutions, members, countries, based its conclusion upon the 96 received answers. And according to the paper, several central banks in different countries are actually considering implementing some form of central bank digital currency, CBDC as it's called. So all across the way, from China and Sweden, Ukraine, Caribbean, so forth, so on, a large number of them researching the potential impact on financial stability, the banking sector, non-banking financial institutions, monetary policy, transmission, and this, doesn't even start to get into the KYC, know your customer, money laundering, financial terrorism, all sorts of crazy questions like that they're absolutely going to have. But as we know, a lot of those answers are already solved through a lot of these surveillance companies like Chainalysis and whatnot. There's a huge degree of comfortability, especially when you think about the discomfort of, the potential crash and all the things that could go wrong that we know about, all the things that could go wrong that we don't know about. So it's really that, a lot of these countries are between a rock and a hard place in terms of where the world is and where every single country in the world is, with the amount of, negative money they have, with the amount of debt that they're holding, with the amount of debt that they're creating, that the amount of, interest that they're responsible for. Digital currencies are of huge interest, especially if they're these central bank digital currencies that are pseudo digital currencies, or digital currencies that are centrally controlled, which is ultimately, at the end of the day, an on-ramp into Bitcoin, right? Just teaching everybody, like AOL did, how the internet works, and then shifting that paradigm to help people bypass the old world way of thinking, and then hopefully move into something better and something that is a lot more user friendly, without giving up so much of the digital sovereignty and digital rights that people are demanding. It more and more people will be demanding, especially as we see shifts from government control into more and more corporate surveillance, corporate control that is has a disconnect from perhaps the government's interests in surveillance of the population. So the motivation that they go on to say for offering the CBDC varies in the report. Emerging economies as well as developed economies said to be considering the CBDC options, with the later seeking to provide an alternative to cash. The frequency of use dwindles. There's a lot of issues with cash, printing cash, getting cash, especially a lot of the developing countries which are using U.S. dollars. It's not cheap to get dollars. It's difficult for a country to manage its own monetary policy and its own printing of money, especially when it's unlimited. It's just as difficult as Zimbabwe has found out. We talked about this before. They have the opposite problem. Money is still difficult because it's kind of rare and scarce. Funny as that is, for them to get dollars now that they're on a U.S. dollar system. So most central banks are not interested in issuing an entirely anonymous CBDC. The institutions want the transactions to be completely traceable so the authorities can have all their information, and the central banks also want their information on where the money is going so they can have all that data on where investment opportunities might lie, how to predict that future monetary policy, to get all that information on the citizens throughout the entire supply chain of what it means to be human. So, however, with that being said, a lot of these institutions are considering proportioning a subset of tokens reserved for large holdings and transactions, only making those ones traceable. And so, this really makes the system really messy. It really muddies up the game. People are going to find out, imagine thinking, okay, not only are the dollars going to become digital, but they're going to make all of these different types of dollars. Once there's a difference in those dollars, people are going to want to throw away some dollars or choose to use these dollars over those dollars. That's the situation that a lot of people are already in right now in terms of stacking sats, stacking, whatever their crypto stacks are, sometimes in the altcoins, hopefully mainly in the Bitcoins, and then paying your bills in dollars, paying your, whatever you need to pay for in dollars, then, only, holding in dollars what you can afford to lose, while stacking into sats is what a lot of people are thinking, is what a lot of people are doing. If the digital dollars come out and digital dollars have their own hierarchy of quality, then and privacy and all that jazz, then that's going to be a really interesting subsystem of the system of this crypto world that we're all in boldly embarking on. Let it be that it or not, this is happening, and more and more we need to start understanding what are the differences in these different nuances, because this isn't like the difference between using Snapchat and Instagram. When we're talking about the difference between Bitcoin and Libra, it's not as binding. It's not. This is just such a level up in terms of how this is going to affect you and the ramifications of you. This isn't just about Facebook knowing what websites you visit and what type of porn you watch. This is about all these corporations knowing every dollar that you spend, where you receive it, where you spend it, and then being able to use that information for ways that may supersede more than just marketing and advertising. So the article concludes by saying, as previously reported by Cointelegraph, the conservative economist Stephen Moore has recently joined a project to make the Federal Reserve-like entity for cryptocurrencies. The project Decentral's purported attempt to regulate cryptocurrency supply in order to reduce volatility of the crypto market. Again, this is just educating people into understanding the differences and the nuances between all the options and possibilities out there, the way a cryptocurrency and a monetary supply system can be created. It's really interesting what we have with the bomb token. I don't know if you heard about the bomb token yet, but with the bomb token, they have like this massively increasing deflation where 1% of the total supply is automatically burned every time a transaction is made. And so they started off with 1 million. There's maybe like 960,000 of those, and it's eventually going to go down to 0, and that's why they call it the bomb token. There's all these different ways of doing monetary policy, and what's going to be really interesting is to see how all of them compare positively and negatively compared to how Bitcoin does and Bitcoin's current trajectory path, as a lot of people, are predicting it to go, right? Because the predicted path of Bitcoin is entirely, predictable, just because we know the emission rate of Bitcoin, and we know how long until all of the Bitcoin are released into the world. And that's something that anybody who's involved in technology, fintech, or a traditional old school banker is going to be able to understand, right? That's the one variable that's going to be the strongest constant for corporations, investors to make moving forward. That's the one thing they're going to know is what is that monetary policy moving forward. So with all that being said, here's our Bitcoin donation address. We'd love any support that you guys have for us. And what else? Bitcoin donation address. And feel free to subscribe if you haven't subscribed already over at youtube.com/mintingcoins. We are youtube.com/mintingcoins. Definitely losing a lot of subscribers lately. Must not be doing a lot right, but at the same time, this is kind of new for me and early, and I'm just super excited about cryptocurrency. Wanted to do videos just to have some sort of creative outlet, and I appreciate any support that you guys have. Love it. This is our website over here, mintingcoins.com. I appreciate everyone that's been with us for so long. Don't really have a lot to sell or anything to sell, really just a bunch of links and affiliate links. It's just a website to have a web presence out there. Our social media is really a lot better, so go to twitter.com/mintingcoins. You can follow me at Gary Palmer Jr. At Twitter as well. Twitter is really where we are most active. Patreon's your thing. We'd love to see you over there, and join our supporter over at Patreon, or the new school way, the preferred way with the Bitcoin blockchain technology. So with that being said, I'm Gary Palmer Jr. You're you, and I'm glad that together we are minting coins.